Hi everyone, this is Arif and today we are here with another video of CIA Part 1, Unit 6, which is about governance. Here is a brief introduction about my career and professional trajectory, and in case if you are interested in knowing me more, you can pause this video, rate it, or we can also connect via LinkedIn. Uh, this is a brief snapshot of the entire CIA Part 1 syllabus, in which we have so far covered foundation of internal audit in the Unit 1. Then we talk about assurance services. Basically, in internal audit, we have two types of services, either assurance or advisory services. So, two units were on assurance services, one unit was on advisory services. Then we talk about ethics and professionalism, and from today's onward we will have a couple of units on GRC, governance, risk and compliance. The remaining would be fraud risk, which would be the last unit of CIA part 1 exam topics. Let's have an overview of the entire CIA Part 1 units that which we have covered so far. You can take it as a unit, you can take it as a topic. It doesn't matter whichever publisher you are using for preparing CIA Part 1. However, if you just consider these as a topic, these are the key main areas that are covered in the CIA Part 1 syllabus. Since I am using Gleim, so this is more systematically in order, which with that publisher, but it doesn't mean that it makes any difference if you are using any other publisher, because the purpose is to understand the topic and to cover the entire syllabus, be it in any format. So as long as you understand the topic, if you understand the concept, this is more than enough. So in our first lecture, we covered the foundation of internal audit, which has a coverage of 10%, and approximately you can expect 12 MCQs to appear from this section of the exam, in which we talk about the purpose of internal audit, which is basically the definition of internal audit. We talk about the impairment and independence of internal audit. We talk about the internal audit charter, the role of internal auditor in risk management. These were the key topics that we covered in the foundation of internal audit, which set the foundation for our entire CIA Part 1 syllabus. Within the internal audit engagement, or as an internal auditor, we perform two types of engagement. One is assurance, which is pure auditing activity, and the other one is advisory, which is consulting activity. So within assurance services, we have covered certain business areas and how we audit those business areas. And in advisory services, we have covered what are the types of advisory services that internal audit perform or carry out. Mainly it's benchmarking and some other types of advisory services, for example, feasibility studies or system to assist the management in the system development and to give recommendation on the controls. So those kind of activities which are covered in advisory services. Then in Unit 5, we have covered ethics and professionalism. The key topic which we cover in ethics and professionalism is basically 5 ethical principles that all the internal auditor has to abide by, which is integrity, mainly honesty, objectivity, to be not biased, competency, that we are skillful, due professional care, that we perform our duties with professional honest, and the last one is confidentiality, that as an internal auditor we have to perform all our audit engagements in a manner, in a professional manner, and to keep confidentiality of the information that we received during the course of our job. So if you look at our today's topic of discussion is governance. which I will take you through the next slide. What are the key elements that we will be covering under governance? But overall, by the end of this unit, we would be somewhere close to 60% of coverage to the entire CIA Part 1 syllabus, and approximately 80 MCQs you can expect as a whole from these MCQs to appear. And in today's unit, we will be covering individually 10% of the entire syllabus, and approximately 10 to 12 MCQs you can expect coming from this section of CIA Part 1. So in today's unit, we will be covering about governance. Overall, this entire section, within this entire section, we will be covering multiple topics related to GRC. G stands for governance, R stands for risk, and C stands for controls. So our first topic is governance. And within the governance, we will be covering mainly three main areas. What are the key governance principles? Secondly, organizational culture. And thirdly, the role of internal auditor in governance. Governance principles set within this unit, the governance principle, the first section will set the foundation about governance. Organization culture is basically something related to people, that how people are important in having an effective governance within the organization and the relationship. And the last one is internal auditor role, which is about in giving assurance on the effectiveness of the governance. So if you would like, you can remember this area in terms of foundation, which will cover in the governance principle. People, because people at all three levels, at the board, management, and the process owner level, we are dealing with the people. So it's a culture which facilitate having an effective governance. And the last one, the one who provide an insight or assurance on the governance activities, which is internal auditors. So these are the three main sections that we will cover in our today's discussion of this part of the CIS syllabus. To start with our today's discussion, let's first dive into the definition of a governance. What is governance as per the IIA? It is the combination of processes and the structure implemented by the board to inform, direct, manage, and monitor the activities of the organization towards the achievements is subjective. So basically, in plain terms, how the board of directors manages the company by setting up a structure and processes in order to achieve the organizational objectives. And if they are doing it effectively, we call it effective or good governance. If it is done badly, then we call it bad governance. So governance is basically how the organization is being effectively operate within its processes and structure. The purpose of the key or the core of the governance is the achievement of strategic objective, that is to maximize the wealth of the shareholders and provide the value to other stakeholders. What are shareholders? Those are the owners of the company, so they have their money invested in the company to maximize their profits. However, in today's time, we are not limited to shareholders. We are serving as an organization to wide variety of parties. We call it stakeholders. So the stakeholders, there are different types of sets of people involved within stakeholders. For example, the management of the company, the board of the company, the employees of the company, vendors, suppliers, regulators, external auditors, public in general. So we have to add value to each and every stakeholder within the organization within our ethical limits. In which way? For example, if there is a company which is operating effectively It provides goods and services of high quality to the public. It pays its tax to the government. It pays or provide employment to employees. It provide health and safety to employees. The management ensure proper governance is being implemented across the organization. The board directs them toward the achievements of long-term objectives. So this as a whole set of individuals benefit from if the organization is operated in a more effective and in a proper governance manner. So therefore governance is one of the most important element of running a company in the best possible manner. So the board of director basically provide two types of governing activity: strategic direction, and the second one is oversight. The strategic direction is through how the business model of the organization is being developed, what are how the objectives will be achieved, what are the risk mitigation or risk management activities that has to be carried out, what are the limits, delegation of authority and responsibility, job description. These are all part of good strategic direction within the company. The second thing is the board is also responsible for the oversight, monitoring the activities of the management. And how they do it, they employ the internal auditors within the company to give them the assurance that the processes within the organizations are effective, there are controls operating effectively, the people, the employees, they are working ethically, and they are fulfilling their assigned duties, and as a result the organization is able to achieve its objectives. So these assurances they observe by the reporting of the internal auditor, and external auditor provide assurance on the financial numbers to the shareholder. So basically this is the two key role under good governance: strategic direction and oversight. What are the elements that affects the governance of any organization? There are internal matters which affect the governance. For example, what are the bylaws or the internal rules and regulation policies of the company? Because these shape the how effectively the organization is being governed. For example, if the organization does not have a proper delegation of authority, it will raise concerns, and there will be conflicting, and people will be making financial decisions beyond their authority limits. Similarly, the organization needs to have a policies and procedures, proper job descriptions, need to have a proper sets of governance in terms of having a proper board of directors, charters of the directors, internal audit function. These are all internal factors. External factors, sometimes the regulator or the government want them to operate in a certain manner. So that is reflected through laws, regulation, which the government try to enforce on companies to act in a more ethical behavior and in the best interest of the public and the government as a whole. There are certain principles, governance principle that needs to be adhered to. That there should be independent and skilled board, the formation of the board, the members of the board, and the background of the board member. These needs to be taken care of in a good governance setup. Clear structure and accountability within the organization, ethical culture and set safe feedback. So the organization encourage ethical decision making, ethical behavior, and there is a feedback mechanism through surveys, and by which we know that the employees are treated fairly, and they can openly communicate if in case they face any challenges. Effective auditor use, for example, internal and external auditors, which means that the internal auditor are independent. They provide assurance on how the company's control environment is in terms of governance, risk management, and control. And external auditors are also independent in terms of providing assurance on the financial reporting and financial numbers. There is a proper documented risk policies and disclosures is performed whenever there is whenever it is required. The organization have an oversight on conflict of interest, which means that people do not give preference to their individual interest, but rather on collective interest or organization-wide interest. So just to be more fair in their business dealing. Compensations are aligned to set ethics and strategy, so we are not exploiting laborers, we are paying them fairly to attract the right skills that is required to achieve the overall organizational objectives. So these are some of the key principles, but it is not limited to these. There are much more than that. But overall, for your understanding, a good corporate governance is where there is a proper and effective board. There are board committees. There is organization structure aligned with the business model. Then we have proper policies and procedures. We have proper charters for the board and committees. We have proper delegation of authority. We have a system of performance mechanism by which we obtain people performances, we obtain people feedback, and we monitor their performance and achievements in order to ensure that overall organization objectives are being met. So these are some of the key elements that you can remember part of a good corporate governance. In order to understand a good corporate governance, we have to set into three levels. The first level is the role of the board. So the board provide direction, and it has certain authority in ensuring a good corporate governance. For example, the board approves the corporate strategy, risk appetite, and policies. The board is also involved in selecting and removing key strategic positions, for example, CEO, CFO, uh, through audit committee, maybe chief audit executives. Um, it sets the pay through remuneration and nomination and remuneration committee, NRCs. So these committees are there to ensure that there are fair packages at all level within the organization and to attract the right talent. Approves major changes, mergers, acquisitions, oversee audit and risk Y committees. So these are the key role of the board ensuring a good corporate governance. The role of the management, senior management in the corporate governance is executive boards directives within the tolerance. So all the executive managements, they they operate within their assigned limits and authorities. They set the reporting requirement, they ensure that the risks are properly managed, they assign the risk owners, periodically assess the governance expectation through employee performance, and carrying out control reviews as second line of defense. The third one, risk owners. What are the key role and activity of the risk owners is to ensure that the risk processes are designed and ensure the risk processes are designed and working effectively in order to mitigate the adverse risk within the company in terms of their processes, and monitor, report, and escalate accurately and on time if they found any issues within their operating processes. So basically, the risk owner are responsible. That who are the risk owners? So we all individual level within the companies are risk owner to perform our duties with utmost care and professionalism. So in case if we find any issues, we have to report it to the right channel, and we have to ensure that our processes are properly done. For example, if my job is to do a data entry, I do it with a proper diligence, my data entry, and my boss, he review it, and his line manager, he approves it. So these are the three steps of controls that at every steps, if everyone follow the right process and procedures, then effectively the overall control environment within the companies will be effective. So different people have different responsibility in ensuring the governance is enhanced within the company. So it's not only the board, which is responsible, but through the board direction, we all have to support them. So this is the overall idea of how or what are the key roles and responsibilities of different stakeholders in enhancing or in a proper or good corporate governance. So now we are moving to our second section, which is organization culture. But let's have a quick recap of what we covered in section one, which was governance principle. So in that, we discuss about what is the definition of the governance. We talk about what are the key influences, internal and external elements that affects governance of a company. We also discuss about the key principles in corporate governance. We talk about role and responsibility of a different stakeholder in good corporate governance. Now we will be discussing about organization culture. So governance is basically the objective that everyone intend to achieve within the organization to because a good corporate governance will enable or ensures success in order to achieve objectives, but it cannot be merely done through system and processes because human capital or human resources involved within the company. So we are not completely a robotic where the processes can perform by their own and we get the results, but or human resources or human beings are part of it. So whenever people are part of it, then culture become an important element in support of the good corporate governance. So just to have a brief snapshot, the board set the direction, the management implements those direction, and the risk owner operates those controls in order to achieve the organization objectives. And the culture is basically is the fabric that ties all these three elements together. If we have a good healthy ethical culture, it's mean that everyone will be motivated to works toward the achievement of the organizational objectives, and they will be following the spirit of the law, not only the letter of the law, which means that sometimes people just follow instruction for the sake of following the instruction but not wholeheartedly follow. For example, you are going on the road and you only reduce the speed whenever you see a camera. So this is the following the letter of the law, which means that you are just literally following, just not to be catched by doing something wrong, you know. Whereas if it changes your behavior and you really believe that exceeding the speed limit would have negative consequences and it's for your safety, your family safety, and the people around you for their safety to maintain certain speed limits, then whether there is a camera or there isn't a camera, you will still follow the instruction on the road that how much is the speed limit and I have to follow the same or maintain the same speed limit in order for the greater good, right? So this reflects a good personality, a good character. Similarly, within the organization, this reflects a good culture. If the ethical culture is not in existence or it's poor, no matter how good the processes are, the policies are, still the organization might bound to fail. Enron is a very good example. And they had great processes, but they have some ethical issues, which eventually lead the collapse of such a big giant company. What is organizational culture? These are basically the shared values of all individuals and their behavior. So basically, what we reflect by our action, that is reflected in the culture of the organization. Um, why it is important? Because if you have a good ethical culture within the organization, it enhances the control environment within the company. Um, how the organization or the management enforce that a good ethical culture by stating the mission of the organization, the vision of the organization, setting the ethical values, But this is not enough. If they do not reflect these elements in their day-to-day decision making, in their behavior, in their action, in their attitude, if there is a unhealthy culture, it will lead eventually to a poor governance. I will give you a brief example from my experience. So, we had a fire incident in one of our offices, and unfortunately, in our regional office in a company. And unfortunately, at that time, we didn't had a BCP or DRP program or effective program implemented in that regional office, which means that the company was not prepared for such kind of incident. However, the organization had such a great ethical culture, and they promote, and they were so much, the employee loyalty was so much attached to the company that majority of the employees were very, they were very like high tenure. They spent a very long time within the company, most of it. There was less turnover in that region, which eventually reflected that a lot of the invoices or the business knowledge was within intrinsically with people. So we reach out to our suppliers. They provided the data and records, whichever is required in terms of contracts or anything, copies and all. We had the soft data, but wherever we needed certain more information, the suppliers and the vendors, they have assisted us. The employees dedicatedly work remotely to provide their services even in those challenging time. And I was to my surprise, within 2 to 3 days, we were completely operational from a remote office, despite we didn't have a proper BCP or DRP. And this has only happened because the organization take care of their employees, and the employees take care of the organization when it requires. So it goes both ways. It doesn't come in one way. So this is a reflection of a good culture, where despite not having a stringent control processes, still the employees enable the organization to stand on its feet again. The board is responsible to oversee the ethical climate of the organization, and the management has to set an example, tone at the top, and so everyone look at the top management. So if they are law abiding, they are ethical, they are taking care of the employees, most likely the employees will follow the same footstep. One of the example I would share from my practical experience, at one time I was sitting with board members, and the CEO has presented one business idea to the board members, and they said that we can maximize our profit if we so there was if we twist certain regulation in our favor, or apply, or do the business activity in a way that we wouldn't be legally not abiding, or we will not be sorry we will not be violating the law, but we have to twist our activity in a way which will maximize our profit. But the board member realized that why do we need to twist things, because if we do not follow the law by letter only, we have to follow it by spirit. So which means that even if it's mean losing some profit, we still have to stick to the law, and we have to forego this business opportunity because it's ethically not correct. It was in a gray area, but it was not completely um, wrong, or it was not completely right, but they were trying to get things around, but the board has stopped. So if that kind of decisions are taken at the board level, it will enforce or provide a strong message to the CEO that they have to follow the right approach. And once they have such kind of experience, they would do the same, and the rest of the management will follow the same footstep. So this is a good example of a good ethical behavior. There is a saying that a good organizational culture is where the bad news move faster than the good news to the top management. So people are not hesitant to raise their voice and concerns to the top management for the improvement of the organization. So the saying goes that a good ethical culture is where the bad news moves faster than the good news to the top management. So it's a bottom up approach. So this is a litmus test approach if you want to assess how good the organization culture. If people are fearful, they are reluctant, which means that the organization will eventually have fragmentation, and they are operating in silos, and eventually there might be missing element by which the decision maker might not be aware of, and making some wrong decision which might eventually harm the company. So this is a very important topic, to have a good ethical culture, or enforce or to influence a good ethical culture within the company, which enables overall or strengthen the overall control environment of the organization. Now let's start with the third section, the role of internal audit and governance. In the first section, we discuss about governance principles. The second, we talk about ethical culture. And now we will talk about specifically how internal auditor enhances the governance maturity of an organization. So basically, principle 9 of the IAEA states that the internal auditor has to plan strategically the activities of the internal audit function to fulfill the mandate of achieving the long-term success. But this success does not exclusive of organization's success. So basically, our objective is to enhance the control environment, risk management, to give assurance on the risk management to the management and to the board members, to effectively achieve the organizational objectives. So this is where our role falls in. There is a standard 9.1 which talks about understanding governance, risk management, and control process. So basically, it states that the organization, that the internal auditor should understand the organization objectives and decision making, and they assess how these objectives are being met in terms of processes, policies, procedure, compliance with these policies and procedures. What is the risk mitigation methodology within these processes? How controls are operating, is it effective or not? What is the ethical environment of the organization? um, how the management reports to the board, how the board manages the activities of the management, what is the performance assurances that is being carried out within the organization. So we basically, internal auditor, we play a part in strategically planning our audit engagement uh, towards the high risk area of the organization, and evaluate all these internal control and risk management and governance aspect in our audit engagement. And if we identify any weaknesses, we highlight in the form of audit findings or observations, and we recommend improvement, and we follow up on these gaps in order to ensure that they are timely mitigated or managed by the management. And effectively, we also inform the board in case if they have to make certain decisions in order to for the achievement of the organization. So basically, our role is very important in the organization, because we keep on monitoring the ethical environment, the control environment of the organization, and we try to highlight on a timely manner on any gaps that we identify before it exposed the company or the organization to a major losses. So this is some of the key uh, um, responsibility of the internal audit that enables the organization to achieve or to ensure the governance maturity of the entity. So basically, in summary, internal auditor, we act as the independent lens, measuring how the governance works in reality, identify risks, and help the board and the management mature the system from compliance to optimization. The difference between a mature and a less mature organization governance is in a mature organization, the internal audit reviews the compliance with the policies, procedures, basic risk coverage. However, in a mature governed organization, the internal audit more focuses on the soft element of the organization. For example, they will ensure that how the decision making is happening in the company. They will review that the reporting of the management to the board is enhanced, how it can be enhanced, or how the management is taking initiative to enhance that thing. The management and the board is talking about ESG or not, carbon emissions and all these things or not. So they will be more uh, emphasizing on the soft element without ignoring the hardcore controls on policies, procedures, system controls, and all. So this is the ultimate objective, that the organization just not merely tick box, which is essential by the way, but just not stop there. They have to achieve further and beyond capability. One of the example which I would share, that if you look at the motto of Dubai Electricity and Water Authority, is to be sustainable for the future generations. This is an amazing motto which they reflect in their corporate tone, which means that the energy requirement supposed to be met for the current requirement for their citizens and for their nationals, but at the same time we do not have to waste, and we have to find optimal way that how the future generation can access such services as well in a sustainable manner. So they find innovative ways of providing the energy sources to the country grid through solars, through wind, through hydro, or other ways, if that is possible. So this is where a mature organization is very predominantly identified or stand out among the other organization. So this should be our aim, as in management, as a board, and as an internal auditor, to enhance the value of the organizational output to wide number of stakeholders. So here we are at the end of our unit, which is the unit 6, governance, in which we talk about in section 1 about the key principle of governance. And in the second section, we discuss about the ethical culture. And the last section, we talk about the role of internal audit in governance. To sum up, corporate governance is how effectively the board is running the organization, and the management following the instruction of the management, and the risk owners are basically responsible to be ethically responsible to perform their duties. Second thing, ethical culture needs to be enhanced, where we follow the spirit of the law along with the letter of the law. Thirdly, internal audit provide assurance to the board and to the management on the in case if they identify any gaps in governance framework within the company. So this is the overall summary of the entire unit. And I hope that you benefit from these lectures in your CIA preparation. Do not stop with my lectures, but rather try to read the book, the study text, and carry out the entire practice MCQs. And there is a lot of learning which you obtain from from practicing the MCQs as well. So use your practice MCQs not only for exam or for test, but rather as a learning resource as well, because there are certain topics which are not predominantly covered in any of the study texts, but you come across these topics in the MCQs as well, because CIA does not have one exclusive study text. They give us a broader guideline what are supposed to be known to be a good internal auditor and to pass the CIA Part 1 exam. So there might be some topic that might not be exactly from the study text, so which you have to learn through your practice MCQs. Hope to see you next time. Until then, take care of yourself and the people around you, and remember me in your prayers.